Welcome to this third video on direct tax basic concepts. Now today we'll discuss about the tax rates. To explain you about the tax rate, let me tell you two things. That in income tax we have two different tax rates. What are they? One is default tax regime and second one is optional tax regime. So when Income Tax Act was brought in 1961, from that time this regime was continuing. Optional tax regime, old regime was continuing. But in recent few years, new regime was brought and that we call it as default tax regime. I thought I'll keep the default regime in as the third video, but I feel that first you should learn optional concept. Then in the next videos you will see about default tax regime, tax rates also. So let's start. Suppose example you file the income tax return under the optional tax regime. Then what would be the tax rates? You are an individual, or let's assume you are a resident super senior citizen and individual. So you are a resident, senior citizen and individual. Then what would be the tax rates applicable? Let's understand. Super senior citizen means a person whose age is above 80 years. Age how much? Above 80 years. So when I am telling, please remember, he should be resident, he should be above 80 years, he should be individual. If these three are okay, then these conditions are applicable. Rates which I am telling that should be applied. Let's see. Up to 5 lakhs rupees income, no tax. 5 lakhs to 10 lakhs, your tax rate will be 20%. Above 10 lakhs, the tax rate will be 30%. So very easy, correct? Up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20%. And above 10 lakhs, simple, 30%. Let's assume Mr. Jatashankar is there. His age is 85 years. He stays in India, he is resident. Now 85 years means he is a super senior citizen. Now his income is, let's assume, 6 lakhs rupees. Now you just see the rates and tell me how much tax should be there. Obviously 6 lakhs is the income. So if it is between 5 lakhs to 10 lakhs, 20% rate. So 6 lakhs into 20% we should do, correct? Absolutely wrong. This is not the way it is done. Then what's the right way? So when 6 lakhs is his income, up to 5 lakhs, zero tax. If the income is between 5 lakhs to 10 lakhs, 20%. Actually, how much it is? 6 lakhs. So 5 lakhs to 6 lakhs income is there. On that 20% we should calculate. Now 5 lakhs to 6 lakhs, when we see the difference, tell me how much it will come to. 6 lakhs minus 5 lakhs. How much it will come? Tell me. 1 lakh will come. Into 20% you do. 1 lakh into 20%. Still, this also you need calculator. Very good. Shall do it. 1 lakh into 20%. How much it will come to? 20,000 rupees. So this is the simple tax. Let's assume Jatashankar's income is 12 lakhs rupees. Just for ease of calculation, 12 lakhs I said. Now how will you compute? You will not say that above 10 lakhs it is 30%. So 12 lakhs into 30%. This is wrong. What is right? If his income is 12 lakhs rupees, up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20% is the rate. So how will we apply? 10 lakhs minus 5 lakhs. That means higher limit minus lower limit in the slab. Okay. 10 lakhs minus 5 lakhs. Difference 5 lakhs will come. That 5 lakhs into 20%. How much? 5 lakhs into 20%. How much? 1 lakh will be the answer. Correct. Now his income is not 10 lakhs. His income is 12 lakhs. So from 10 lakhs to 12 lakhs. What is the rate applicable? 30% rate. So tell me 2 lakhs into 30%, how much it will be? 2 lakhs into 30%, how much it should be? 60,000 rupees. So up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20%, we got 1 lakh. 10 lakhs to 12 lakhs, 30%, we got 60,000. 0 plus 1 lakh plus 60,000 will come to how much? 1 lakh 60,000 rupees. So this way you have to calculate the tax. Now in the next two things, you should interpret, understand in the same way. And when we solve the problems, I'll put it on paper and show you how each and every computation will be done, and very critical problems also will be doing in this class. And I'll tell you, CMA textbook has not given reasonable problems also on tax rates. But I have included 14 questions so that you get concept, confidence, and that courage to face the exams. Right? For that, we'll solve complete 14 problems, and that too amendment based problems also I have included. I only created it because when I created at that time, even books were not released in the market. Right? So I included everything. You just be assured, just follow what I said. Now, hey, I'm talking about tax rates. Correct? Tax rates for whom? Resident, super. Come on, remember, super should be there. Resident, super, senior citizen. Right? Now, what is the tax rate? Up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20% tax. 10 lakhs above, 30% tax. That's it. Now, in the previous year, if his age touches 80 years, then definitely he'll get the benefit. If suppose on the 1st April of the assessment year, like example, his birthday comes on 1st April 2025, 80th birthday comes on 1st April 2005. 80th birthday comes on 1st April to, I'm wrong. Let me correct. So his birthday comes on 1st April 2025. Now I'm 100% correct. If his birthday comes on 1st April 2025, still he'll get the benefit of tax rate. Yani benefit of higher exemption. Okay, very good. So if in the previous year 2024-25 or on the first day of the assessment year, that is 1st April 2025, his birthday is celebrated, 80th birthday is celebrated, then he will pay tax up to 5 lakhs nil, 5 lakhs to 10 lakhs 20%, 10 lakhs to above 30%. Now let's go to the second part. If somebody is resident, senior citizen, I am telling resident senior citizen. So what does this mean? His age is between 60 to 80 years. Age between how much? 60 to 80 years. 60 to 80 years. Okay. So we call him as senior. So if it is 60 to 80, senior. If it is above 80, super senior. Okay. Difference should be clear. So if he is resident, senior citizen, and individual, then up to 3 lakhs, no tax. Up to 3 lakhs, no tax. 3 lakhs to 5 lakhs, 5% tax. 3 lakhs to 5 lakhs, how much? 3 lakhs to 5 lakhs, how much? 5% tax. 5 lakhs to 10 lakhs, same, 20% tax. 5 lakhs to 10 lakhs, 20% tax. Above 10 lakhs, 30% tax. So I am talking about whom? You have to memorize this permanently. Zindagi bhar yaad rehna. Right? That's the intention. That's why I am repeating so much. right? So it's not waste of time if you feel. It's actually memorizing during the class itself. Okay, so I'm talking about resident senior citizen between 60 to 80 years. Then only these rates will apply. Up to 3 lakhs, nil. 3 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30% is the rate. Now, his birthday in the previous year 2024-25 or on 1st April 2025, that is first day of the assessment year, is 60 years, then he can get the benefit of these tax rates. Now, if suppose somebody is not falling under the above two category, he is a resident but his age is below 60 years. He is a non-resident irrespective of age. So what I said, he is either a resident below 60 years or he is a non-resident irrespective of age. He is an association of person, body of individual, artificial juridical person. So this category, please remember what I said. He is a resident individual below 60 years. He is a non-resident irrespective of age. He is AOP, BOI, AJP. Then up to 2,50,000, no tax, nil. 2,50,000 to 5 lakhs, 5%. 2,50,000 to 5 lakhs, 5% is the rate applicable. Okay, chalo. 5 lakhs to 10 lakhs, 20%. 10 lakhs above, 30%. Come on, remember. To whom? For resident individual below 60 years, non-resident, AOP, AOP, BOI, AJP. For all this, up to 2,50,000 nil, 2,50,000 to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%, 10 lakhs above, 30% is the rate of tax which you are supposed to remember. Now you should not get any doubt. So rates are different based on age and residential status. Correct? Yes. So if suppose he is a resident but super senior citizen, up to 5 lakhs nil, 5 lakhs to 10 lakhs 20%, 10 lakhs above 30%. If he is a resident senior citizen between 60 to 80 years, up to 3 lakhs nil, 3 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, 10 lakhs above 30%. Okay. Then if he is resident but below 60 years, non-resident irrespective of age, he is AOP, BOI, AJP. In that case, up to 3 lakhs nil, 3 lakhs to 5 lakhs. Wait. If he is a resident below 60 years, non-resident irrespective of age, AOP, BOI, AJP, for them up to 2,50,000 nil, 2,50,000 nil, 2,50,000 to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%, 10 lakhs above 30%. This way you should be able to remember. So where that slab will start for super senior citizens, up to 5 lakhs exemption. For senior citizens, up to 3 lakhs exemption. And for all others, up to 2,50,000 exemption. This way you should remember. Now, once we understand the tax rates, you should also understand some discount is given. We call it as rebate actually. Rebate is a discount in tax. So you will get discount in tax if you are a resident individual. So if I ask you, is this rebate available to non-residents? The answer is no. Is this rebate available to HUF, AOP, BOI, AJP? The answer is no. Then to whom it is available? Rebate is available only to resident individual. If you are filing returns under this optional regime which I am discussing now, or if you are filing return under your default tax regime, which you will see in the next lectures, in both the cases, only resident individual gets the benefit. Right? Very good. Now, the next question. If your income is up to 5 lakhs, then only you will get the discount. If suppose your income is 5 lakhs 1 rupee, then you will not get rebate. If your income is 6 lakhs, you will not get the benefit of rebate. If your income is 4,90,000, then you will get the rebate. 4,90,000, 4,99,999, still you will get the benefit of rebate. If your income is exactly 5 lakhs, still you will get the rebate. Okay, right. How much is the rebate? So you should be resident individual is the primary condition. Your income should be not exceeding 5 lakhs, secondary condition. And the amount of rebate is tax before cess. What I said? Tax before health and education cess, which I'll tell later on. Okay. In simple language, tax calculated as per the tables which we discussed just now. Okay. That is tax before cess. So tax before cess or rupees 12,500, whichever is lower, that is your rebate. What I said? Tax before cess or 12,500, whichever is lower is your rebate. Let me tell you with an example. Suppose your income is 4 lakhs. Tell me, what should be the tax rate? Normal SSC, your age is just 25 years and your income is 4 lakhs. No, don't feel bad here, just example. Huh? I believe, I hope that it should add some zeros to it also. Okay, chal. So if your income is 4 lakhs, now calculate. Are you eligible for rebate? First question. Sir, income is less than 5 lakhs. Yes. So you are eligible. Excellent. Now let's calculate tax. You are below 60 years, correct? So you are resident, you are below 60 years. So for you, up to 2 lakh 50, nil. 2 lakh 50,000 to 4 lakhs rupees. 5%. Arey yaar, in the slab it is 2 lakh 50 to 5 lakhs, 5%. But your income is not 5 lakhs, correct? Your income is just 4, less than 5. So let us restrict the slab to that point. Okay. So 2 lakh 50,000 to 4 lakhs, 5%. How much it will come to? Calculate. Higher slab minus lower slab into 5%. So 4 lakhs minus 2 lakh 50,000 into 5%. Tell me how much it will come to? 1 lakh 50,000 will come. Correct. 4 lakhs minus 2 lakh 50, 1 lakh 50 will come. Now calculate into 5% and tell. Yes, 7,500. Awesome. Arey, you are listening to recorded classes doesn't mean that I am not able to hear. You give correct answer, still I am hearing. If you tell wrong answer, still I am hearing. Okay? Very good. So, listen, believe that I am live with you. Hmm? Right. So, 7,500 is your tax before cess. And second one is 12,500. Whichever is lower. So, tell me 7,500 or 12,500, whichever is lower. So your rebate is 7,500. Correct? So your tax 7,500 less rebate under 87A, under section 87A, 7,500. So how much you will pay? Sir, 7,500 minus 7,500, 0. So nothing to pay. Yes, that's what happens in most of the cases. But all different types of cases also I'll discuss with you when we solve the problems. But first you should understand the applicability. When I'm giving the lecture itself, you should be able to do basic computation. And when we solve the problems, from basic to advanced, I'll take you. Okay? Sure. So rebate is clear to all of you. Very good. So rebate is available to whom? Jaldi se bolna. Resident individual. When if income is up to 5 lakhs. How much? Either the tax before cess or 12,500, whichever is lower. That's it. No confusion. Okay? Very good. Now let me discuss with you that we have to go forward. Okay, rebate is done. But suppose you are earning less income, government says we'll give discount. rebate. Middle class people, lower middle class people, government is giving discount in tax. We discussed just now. But suppose you are among the higher middle class, you are going towards riches. Government says, please, थोड़ा हमको भी दे देना, इधर भी दे दे बाबा. Right? For that purpose, surcharge is introduced. So what is the rate of surcharge? Before that, surcharge means tax on tax. Surcharge means tax on tax. Now, whether to apply surcharge or not, you should check the income. And once you know the rate of surcharge, multiply it with tax computed. Simple? Very good. Suppose, let's assume that your income is up to 50 lakhs rupees. Government says, जान दो यार, क्या लेते surcharge? Let's leave it. So no surcharge. So up to 50 lakhs, no surcharge. But if your income is 50 lakhs 1 rupee to 1 crore, if your income is 50 lakhs 1 rupee to 1 crore, 10% surcharge. 50 lakhs 1 rupee to 1 crore, 10% surcharge. 1 crore 1 rupee to 2 crore. 1 crore 1 rupee to 2 crores. How much? 1 crore 1 rupee to 2 crores. How much is the surcharge? It is basically 15%. And if it is 2 crore above but up to 5 crores, 25% surcharge. And if it is above 5 crores, then it is 37% woofing surcharge. Okay? Sure. I'll tell you up to 50 lakhs how much is the rate of surcharge. Up to 50 lakhs, no surcharge, 0. But if it is 50 lakhs 1 rupee to 1 crore, then 10%. 1 crore 1 rupee to 2 crore, 15% surcharge. 2 crore 1 rupee to 5 crores. Come on, you tell. 25% surcharge. Very good. Excellent. Now come to above 5 crores. That is 5 crore 1 rupee or above income. Now when we are seeing the slab, we are checking your income. In which category you fall. That rate of surcharge will apply. Right? So earlier when I actually taught you the income tax computation based on your income, right? That was step by step, stage by stage. Okay? But when I am telling you about surcharge, it is flat. Suppose example, your income is 60 lakhs. So where you fall? You fall between 50 lakhs to 1 crore, correct? So for you, 10% surcharge will apply. That's it. Suppose example, your income is 30 lakhs. No surcharge, because up to 50 lakhs, no surcharge. Suppose your income is 1.5 crores. Then surcharge will be, yes, between 1 crore to 2 crore, 15%. So 15% will apply. Suppose your income is 2.5 crores. Then 2 crores to 5 crores, 25% surcharge, correct? So 2.5 crores income is there, 25% surcharge, not on 2.5 crores, but on tax computed. Okay, on the tax, you will apply 25% surcharge. Okay, and finally, if your income is more than 5 crores, suppose example 6 crores, then 37% surcharge. I'll tell you up to 50 lakhs, no surcharge. 50 lakhs income, no surcharge. 50 lakhs 1 rupee to 1 crore, 10% surcharge. 1 crore 1 rupee to 2 crore, 15% surcharge. 2 crore 1 rupee to 5 crores, 25% surcharge. 5 crore 1 rupee above, 37% surcharge. And I'll tell you, when government calculates the tax, which I just told you, out of that tax, 2/3 will go to state governments. 1/3 central government will keep. But when it comes to surcharge, whatever surcharge calculated, entire amount is kept by central government. So that's why when Modi government came, they did not increase the tax rate. They increased the surcharge rate. That means whatever they have to get, only they have to get. They increased that portion. Sometimes people have to act smart to do something good. So they are smart. Okay. Anyhow, it is a menace for the taxpayers, but all the development which we are able to see now, the strength which we are able to see now of our country is all because of the taxes which we are paying to the government. So as a taxpayer, let us feel proud. Okay. Now, let's continue with the next concept. So we understood tax rates, rebate we understood, surcharge we understood. Let me tell you regarding surcharge that when Nirmala Sitharaman ji shared these surcharge rates, all were very angry. So much rumors were there, just social media rumors, nothing real, but still there was a WhatsApp group where Ambani is there, Adani is there, Nirmala Sitharaman ji, the finance minister is there. When budget declaration was done, and she said above 5 crores, 37% surcharge. Mukesh Ambani became so angry that he exited the WhatsApp group. Now, these all type of comedy jokes are nice for common people to hear. But these are not true at all. Okay? But anyhow, obviously he would have not felt good. He would have communicated to the government that this is unfair. And when rich people complained, they brought a small change. What is it? If your income is from dividend means when you purchase the shares, you will get a part of the profit as dividend, correct? Yes. So that dividend income is there. Or your long-term capital gain from 112 section, which I'll detail, I'll tell you now, just few minutes more. Okay. 112 long-term capital gain. 112A again a long-term capital gain. 111A short-term capital gain. So if your incomes are from dividend income, long-term capital gains or short-term capital gains under 111A. Long-term may be 112 or 112A. Short-term only 111A. These four incomes if you are earning. Okay. Then government said the surcharge rate cannot be more than 15%. Surcharge rate cannot be more than 15%. So this is actually favoring that stock market traders, the rich people. Okay. So because Ambani don't get huge, great salaries, they don't take salaries. They are more interested into shares, the shares dividend and the increase in the price of the shares. They sell the shares and they earn incomes. Right? Again, they buy the shares. So this is how they earn the money. Now, if such a high surcharge is imposed of 37%, obviously they will not feel good, correct? So they asked the government that Indian stock markets will fall down if you do like this. Then government passed a resolution ki no, if it is stock market income, like if you are a trader, short term, then 111A. Okay, short term capital gain under 111A. If you are a long term investor, then long term capital gain in stock markets is covered under section 112A, 112A. If you sell real estate, capital assets, then 112 section. And dividend income anyhow known to you. If these four incomes are there, what are they? Dividend income, long-term capital gain under 112, short-term capital gain under 111A, long-term capital gain under 112A. If these four are there, then your surcharge will be restricted to 15%. Suppose Ambani sold the shares of some 1% shares of Reliance. He got 5,000 crores. Something like that happened. Now, after deducting the cost, if we calculate, suppose he earned 2000 crores. Now, already tax rates are high. On that, if they say 37% surcharge, it would be unfair on them. They'll not be happy with government. Correct? So, restricted to 15%. So, what did we discuss? We discussed that surcharge rates are up to 50 lakhs, no surcharge, 50 lakhs 1 rupee to 1 crore, 10% surcharge, 1 crore 1 rupee to 2 crore, 15% surcharge, 2 crore 1 rupee to 5 crore, 25% surcharge, 5 crore 1 rupee above 37% surcharge. But suppose example, any of these four incomes come, dividend 111A, 112, 112A, then these incomes should be kept separate, other incomes should be kept separate. Okay, these incomes should be parked separately, that income should be parked separately. Then you have to apply surcharge with a separate rate on both. Right? Understood? Practically you will understand when we solve the problems, and you will not see any such problem in the CMA study matter. But in the exams they ask. Don't worry, in the exam they will ask. And they will tell you, concept is given na, so why you can't solve the problem? Practically when we apply, then only you will be able to do it. But don't worry, I'm there na. I have brought some wonderful problems for you to solve, and you will do wonders. Okay, next. What are the tax rates applicable to partnership firm? Simple, 30%. Suppose one partnership firm prepared its P&L account and they got income of 10 rupees. Sir, joke kar rahe ho? I'm telling just for you to understand, 10 rupees. Their business income came to be, or total income came to be 10 rupees. On that, they have to pay 30% tax. That is 3 rupees they have to go and pay to the government. Yes, even if your income is too low, still you have to pay 30% because this is flat. If your income is 10 crores, then also 30%. 3 crores you have to pay to government. Okay. 10 crores into 30% will be 3 crores only, na? Yes. Okay. If suppose your income goes above 1 crore, you are a partnership firm, you are a limited liability partnership firm, any of the two, and your income goes above crore, above 1 crore, then 12% surcharge will apply. That means not only 30% tax, but also 12% surcharge. Now, how the computation comes, let me tell you. Suppose your income is 10 crores. So, more than 1 crore, can I say? Yes. Okay. So, 10 crores income, 30% tax. How much your tax comes to? 10 crores income into 30%, 3 crores will come. Correct. Many students mess up with zeros. Please practice before the exams that you are very clear about zeros, or go to a school teacher and learn. But don't tell that I'll manage. You just write 1 0 less, and in the exam he'll give 1 0 less, and see what would be the result. Right? So be very clear about how many zeros you are pitting in a crore, in 10 crores, in lakhs, in thousands. Okay? Don't get confused. I have seen many students confused with zeros. Their brain goes blank. Yes. So 10 crores is your income. And that's why I tell orally, because many a times what happens, if I suppose do some basic things also on paper and show to you, right? It can happen. But what happens is you will see and write. But if I tell orally, you have to write. Your number writing capacity will improve. Okay. So 10 crores income, 30% tax. How much it would be? 3 crores. Correct? Plus you have to do surcharge. How much? 12% I said. Now 12% should be calculated on 10 crores or on 3 crores? Tell me. The answer is on 3 crores. Surcharge is a tax on tax. So on 3 crores, 12%. How much it would be? 3 crores, 12%. Sir, 3 crores, if we do 12%, we'll get 36 lakhs. Am I right? I am doing orally. 36 lakhs. Yes. So 3 crores plus 36 lakhs. 3 crore 36 lakhs is the tax which you have to pay. Okay. But it is not over. Health and education cess will also come. It is 4% of 3 crores 36 lakhs. So health and education cess is a tax on tax plus surcharge. 4%. And whoever the assessee may be, you are a partnership firm, individual, company, local authority, artificial juridical person, AOP, BOI, sab kuch bhi, for you 4% health and education cess is compulsory. That's why you would be seeing that lot of new IIMs are coming, new IITs are coming, IASCs are created, 100 Sainik schools government is trying to construct. So many aims like hospitals are being constructed on a rapid fire mode. Why? Because a separate fund is created from the taxpayers by collecting it from taxpayer, and it is used without corruption. And that's why this development is happening. Right? Let's continue with the story. The story says that we have to understand now tax rates of company. Correct? Yes. For partnership, what is the rate? 30% tax rate flat and 12% surcharge if your income exceeds 1 crore. That's it. Companies, let us divide into foreign company and domestic company. Foreign company, here there is an amendment. It can come in MCQs for you. Please be careful. Okay. Because earlier the rate of tax for foreign company was 40%. But now it is 35%. So in the exams, if they ask the rate applicable for foreign companies is A 40%, B 35%, C 30%, D 25%. Don't get confused. For foreign companies, the rate of tax is 35%. In MCQs, it can be the favorite one this time. Okay, next. So we understood foreign company rate is 35%. What about domestic companies? So let's see a condition that they want to check your turnover of 2022-23. Now don't check the turnover of any other year, because your previous year for your exams is 2024-25. Right? Now 23-24 accounts are ready. Are they audited? No, right? So 23-24 we ignored. But 22-23 audited accounts are ready. 22-23 audited accounts are ready. So that's why income tax want to check that turnover. And if 22-23 financial year, I'm telling financial year, okay? 22-23 financial years turnover is more than 400 crores. More than 400 crores. Then your tax rate will be 30%. But if 22-23's turnover is less than 400 crores, your tax rate will be 25%. So 22-23's turnover is more than 400 crores, then your tax rate for assessment year 25-26, that means for your exams, right? More for your exams, the rate would be 30%. Less than 400 crores, your rate will be 25%. Clear? Okay. So when you go to the question, they will ask you a simple MCQ type question. In the financial year 2022-23, X Limited's turnover is suppose 200 crores. What would be the tax rate applicable for the company in the assessment year 25-26? you should tell, Arey, turnover is less than 400 crores. So 25%. Correct? Like that, you should be able to understand. Now, for companies, the surcharge rates also we have to learn. Right? Domestic company, when it is 25, when it is 30, clear? Okay? Very good. Now, for foreign companies, always 35. This year, it is a change. Important. Okay? Next, think about surcharge. Surcharge is a tax on tax. So, suppose your turnover is your income, not turnover. Okay? Your income is less than 1 crore, up to 1 crore, let us take. Okay? Or between 1 crore 1 rupee to 10 crores, or 10 crore 1 rupee or above. See your income. If your income is up to 1 crore, no surcharge. If your income is 1 crore 1 rupee to 10 crores, surcharge rate will be 7% in case of a domestic company. And if your income is more than 10 crores, surcharge rate will be 12%. Chalo, come on. Let's concentrate. Sorry for the disturbance. Up to 1 crore, no surcharge. 1 crore 1 rupee to 10 crores, 7% surcharge. More than 10 crore, 12% surcharge. This is for domestic company. Now, for foreign company, up to 1 crore, no surcharge. 1 crore 1 rupee to 10 crore income, 2% surcharge. 10 crore 1 rupee to above income, 5% surcharge. Now you may say, sir, this government is fraud, sir. You are collecting more from domestic company and less from foreign company. What is this, sir? Arey yaar, you understand already foreign companies are paying very high rate of tax. So that's why surcharge is less. Okay. This is how governments actually plan. So let's continue. So we understood for foreign companies, what is the rate of surcharge? Up to 1 crore, no surcharge. 1 crore 1 rupee to 10 crore, 2% surcharge. More than 10 crores, your surcharge rate will be 5%. For domestic company, up to 1 crore, no surcharge. 1 crore 1 rupee to 10 crore, the surcharge rate would be 7%. More than 10 crore, your surcharge rate would be 12% for domestic companies. Now you understood the surcharge also. Let me tell you, after surcharge, okay, we have to discuss health and education SES. These IIMs, these IITs, these IISCs, these Sainik schools, all the development is because of this health and education SES. You, the taxpayers who are paying. So salute for all of you. 4% health and education SES we are paying. It's a tax on tax plus surcharge. Health and education cess is a tax on tax plus surcharge. So if I have to calculate for the partnership firm, that example you remember, 3 crores was the tax plus 36 lakhs was the surcharge. So 3 crore 36 lakhs came into 4% when you do, you get health and education cess. And when you add health and education cess, how much amount comes that this firm has to pay to the government. Now you understood rates of tax for different assesses. For local authority also, tax rate is very simple. Are 30%. That's it. Okay. And surcharge also, if their income is more than 1 crore, 12% surcharge. So can I say local authority is treated same like partnership firm? Okay. Cooperative society we'll discuss when assessment of individual and HUF chapter comes. Okay. Let's continue with the next topic. So rates are clear. But I will tell you the rates are given in Finance Act. So whatever I discussed till now, that always comes in your Finance Act every year. Suppose whatever rates are given on 1st Feb 2024. So on 1st Feb 2024, government brought its budget. Every 1st Feb they bring it. So along with the budget, Finance Act also introduced. So on 1st Feb 2024, Finance Act 2024 was brought. And whatever rates are mentioned there, I discuss it till now. So when I am talking about resident senior citizen, I'm talking about resident citizen, senior citizens, super senior citizens, individuals, rebate, surcharge, right? I'm talking about the rates of tax for firm, company, right? All are there from that Finance Act 2024. Okay, but there are some rates which are there given in the Income Tax Act itself. Whatever I discussed till now in this video are all brought every year in the Finance Act. So what I am teaching is Finance Act 2024 applicable for assessment year 2025-26 and applicable for CMA exams in the calendar year 2025. So if it is June 2025 exams or December 2025 exams, these rates only will apply. But there is a change. The change is that certain changes, देखो 2024 was an election year. So 2024 was an election year. Please remember, 2024 was an election year. So on 1st February, they did not bring any changes. The changes were brought on 23rd July after the government was formed. So 23rd July, the Finance Act 2 came and that brought all the changes. So it brought the changes in the rates of tax, which I am going to tell you now. What are that changes? Let's discuss which are common, which are regular. That if you are actually into lottery, crossword puzzles, right? And you earn some casual income, like betting on horse races, and you earn income. 30% is the rate of tax. Now, these rates are given in the Income Tax Act itself. It's not given in the Finance Act. Okay, so winnings from lottery, winnings from horse races, right? If it is crossword puzzles, online games, right? All that when you earn the income, 30% is the rate of tax. So when it comes to betting, when it comes to lottery, when it comes to horse races, 115BB talks about, and it is 30%. When it comes to online games, they gave the rate under 115BBJ section. Which section? 115BBJ. Online games. But the rate is same, 30%. So if it is lottery under 115BB or online game related winning income under 115BBJ, rate is same, 30%. Suppose you are earning undisclosed income. Suppose you have income which you did not tell to the government. And one day income tax department raided your premises and they were able to catch how much income you have, or your bills they were able to find, assets they were able to find. They asked you, from where did you get this much? Did you show it in your income tax returns? And if suppose you are able to satisfy them, proper reasons you are able to give, you have shown income tax records, your GST record, and say that these are my genuine assets, no problem. But if you fail to give satisfactory evidence. Then government will tax you under section 115 BBE. Under which section? 115 BBE. For undisclosed expenditure, undisclosed investments, undisclosed cash, undisclosed income, which I'll teach you in PGBP chapter. Don't worry. Okay. Business income related chapter. Okay. So 115 BBE tax rate is 60%. How much is the tax rate? 60%. So if you don't show to government and you try to hide the income, the day when you are caught on your entire assets, on your entire property, which you are not able to explain, you have to pay 60% tax. If you feel only this much, no, plus 25% surcharge also. Sir, पूरा ही ले लो sir. Yes, no problem. 4% health and education cess. So 60% tax, 25% surcharge, and 4% health and education cess. We'll discuss more about this 115 BBE when we go to business income related chapter. Okay. But now the most important change I'll discuss, and that is change in rate of capital gain tax. Change in rate of capital gain tax. Change in rate of what? Capital gain tax. So the scene is before and after. Okay. Before 23rd July 2024 and on or after 23rd July 2024. So whenever I say something before, you should understand it is before 23rd July 2024. When I say after, it is on or after 23rd July 2024. Okay. Now, I'll tell you reasons also why they changed the rates. Okay. Let's see. First, let us take simple section, that is 112. It is long-term capital gains. If you sell property, if you sell jewelry, if you sell archaeological collections, right? If you sell your ships, aircrafts. So any capital assets other than shares. Shall I say simply like that? Yes. Other than shares, if I sell any capital asset, fixed asset in your accounting language, okay? If you sell, then 112 section will apply. And you should sell after keeping it for a long period. Long period means roughly 2 years. So at least 2 years you should keep and then sell. If you do like that, then before 20% rate was applicable. Now, on or after 23rd July, 12.5% rate of tax will apply. So that means government reduced the tax rate. Okay. For long-term capital gain on sale of building, sale of property, sale of jewelry, sale of aircraft, ships, right? Any fixed assets in simple language other than shares and listed securities. What is the rate? Before it was 20%. Now it is 12.5%. So before 23rd July, 20%. On or after 23rd July, 12.5%. But this information which I said is just half the story. It is half the story. The full story you will get in capital gains chapter. Okay. As of now, simply remember, sir, 112 section, long-term capital gain on sale of capital asset, that is fixed assets other than shares, debentures. That's it. Before 20% was the rate. Now from 23rd July, how much? 12.5%. That's it. Now another section, 112A. Now this is long-term capital gain only. But how much is the rate? Earlier it was 10%, but now it is 12.5%. Earlier it was 10%, but now it is 12.5%. But please remember, when I am talking about 112A, I am talking about stock, I am talking about shares, I am talking about listed securities. So I am talking about units of business trust also. So if it is listed shares, listed debentures, if it is units of business trust, such type of financial assets. More discussion in capital gains chapter. Okay. We are just understanding the rates for the time being. Okay. Under 112A section, if it is a long-term capital gain on sale of listed shares, listed debentures, or units of mutual fund, units of business trust, what is the rate? Earlier it was 10%. But you are also getting 1 lakh exemption. Now it is 12.5%. But exemption also increased to 1,25,000. So what does this mean? Suppose your capital gain is 10 lakhs. Earlier you will deduct 1 lakh, right? 10 lakhs is your income. 1 lakh you will deduct. 9 lakhs will come. 9 lakhs into 20% you have to do. That's it. But now what you will do? Now, if suppose your income is 10 lakhs, that is after 23rd July, you sold some shares, you got 10 lakhs as capital gain, right? After computation, you get this, okay? You got 10 lakhs, 1 lakh 25 should be deducted. So 10 lakhs minus 1 lakh 25 on 8 lakhs 75,000, 12.5% tax should be paid. Very easy, very good. Now, short-term capital gains. The biggest shock is given to stock traders, short-term traders, which I am going to teach you now. Okay, once I tell this rate also, then I'll tell the logic. Simple. Listen carefully. 111A talks about short-term capital gain on stock market transaction. In simple language, so if you sell listed shares, listed debentures, units of business trust, and it is sold in short period, then it is taxed under 111A. Earlier, the tax rate was 15%. But now the tax rate is 20%. So they increased the rate of tax. Earlier, that is before 23rd July 2024, 15% was the rate, but now they made it 20%. Now you may be thinking, sir, normal capital gains on sale of property, sale of assets, they decreased the rate, but on stock market related capital gains, they increased the rate. Absolutely right understanding. Why they did so? Because more people, right, Indian population is engaging more into stock trading now. They are more becoming aware about stock markets, investments, and all. So when more transactions are happening in stock markets and people are earning more from it, obviously government also feels we will also catch hold of this. We'll also get some share of the income which people are earning. So government increases the tax rates. And government don't want to encourage short-term trading. Right? You feel that I'll invest today something and I'll become rich tomorrow. If you want to deal in short term, government is interested to discourage you. And that's why on 111A section, short-term capital gain, the tax rate was 15. They heavily increased it to 20%. I also discourage trading. I don't suggest any student to do trading in stock markets. Continuously buying, selling, observing, taking tension. Nothing like that you should do. If you truly feel you want to earn from stock market, be an investor. What Warren Buffett does, he invests, he relax, he enjoys. And what these traders do, Around your friends you see who are into trading, always tension, tension, tension. Right? So trading gives you tension. Government says be away, and 99% of the people who are into trading lose their money because the big fish will always kill the small fishes. So don't die. If you want to sustain, become an investor. Have that big heart and big financial analysis you should do before you actually invest in any company. Okay, these are the tax rates which I wanted to tell you. Again, repeating for all of you. Come on, listen. Hey, if it is your lottery income or online gaming income, 30% rate of tax. Okay, if it is undisclosed income, 60% rate of tax and 25% surcharge, 4% health and education cess. That's normal. Okay, and if suppose you are earning long-term capital gain under 112 I said, then before it was 20, now it is heavily decreased, only 12.5%. More stories in capital gain chapter. Okay, if it is 112A stock market long-term capital gain, earlier it was 10% with 1 lakh exemption. Now it is 12.5% with 1,25,000 exemption. Okay. Now, if it is short-term capital gain under 111A, then earlier it was 15%. Now it is 20% tax. Okay. Right. Now, all concepts done. One small concept left. That is marginal relief. I said correct. Surcharge, surcharge, surcharge. When I said surcharge, suppose your income is just 1 crore 1 lakh rupee. On you just earned little more than 1 crore. Little more than 1 crore. But you are paying 15% additional tax. So government was requested that this is unfair on the people who earn little more than that limits. Little more than 50 lakhs, little more than 1 crore, little more than 2 crore, little more than 5 crore. If they earn and you apply surcharge on them, it is unfair. So give some relief. So government said, okay, we'll create 6-step formula to give a relief to you. Okay, how it is done? Let's see. First step. You know tax computation. I just taught you, correct? Same way you have to do tax computation. So you will apply the tax rates and compute the tax on the income. Let's assume your income is 1 crore 1 lakh. So on that 1 crore 1 lakh, you will calculate the tax. Obviously surcharge will apply, correct? So add surcharge also. 15% surcharge you add. And your step A is complete. Don't add health and education cess. That's why I did not tell you. Okay. Only your tax as per the slab rate plus your surcharge. That's it. Stop. Step A complete. Now come to step B. Step B says calculate tax on the limits, like nearby limit. Now when I said 1 crore 1 lakh is your income, nearby limit is 1 crore. That specified limit 1 crore is there. Na? On that you calculate the tax in step B. So when you calculate tax on 1 crore in step B, you have to apply the slab and calculate the tax. But on 1 crore also surcharge will apply, correct? So add surcharge. On 1 crore, how much surcharge? Tell me. On 1 crore 1 lakh, 15% surcharge. So on 1 crore, how much? 10% surcharge will apply. Arey, you forgot. 50 lakhs 1 rupee to 1 crore. 10% I said. 1 crore 1 rupee to 2 crore. 15% I said. Correct? Yes. So that's why I said that in step 2, you will calculate tax on that specified limit. And if applicable, add surcharge also. But don't add health and education cess. Suppose in the question, they would have given 51 lakhs as your income. Then in step 1, you will calculate tax as per slab and add 10% surcharge. In step B, you will simply calculate tax on 50 lakhs, but no surcharge applicable. So in step B, if surcharge is applicable, apply, otherwise ignore. But in step A, definitely surcharge will be there. In both the steps, no health and education cess. Please remember, okay? Now come to step C. Income above the specified limit. So in my example, I said your income is 1 crore 1 lakh. So you will write your income 1 crore 1 lakh minus that limit 1 crore. So how much is your excess income? 1 lakh. 1 crore 1 lakh minus 1 crore. 1 lakh will come, na? That's step C. What is the step D? D is the maximum tax you are ready to pay. What is the maximum tax? Step B plus C is the maximum tax you are ready to pay. Suppose example, in step 1, when we calculated the surcharge, your surcharge itself is more than 1 lakh. So what will you tell to government? Arey government, I don't want to pay this extra surcharge. If you want, you take entire 1 lakh. But don't trouble me so much. So maximum tax is calculated in step D. And that is tax as per step B plus step C amount. So step D is equal to B plus C. Now what is step E? Step E is your final tax. Step E is your final tax. How will we get? A or D, whichever is lower. How is your final tax? How much is your final tax? You will pay either A or D, whichever is lower. And once you get this lower of the two, right, step A or D, whichever is lower you get, add health and education cess and complete it. Step A or D, whichever is lower, then add health and education cess and complete the tax computation. But will you get marginal relief? That we have to see in step F. Suppose example, your step A is more than step D. What I said, step A is more than step D. Then you will get the marginal relief. Right? Step A is more than step D. Then you will get marginal relief. And in F we will compute marginal relief is equal to step A minus step D. That's it. This is how you should compute the marginal relief. So step A, what I said to you, please repeat with me. Simple, tax on your income plus surcharge. Nothing more than that. Step B, tax on that specified limit plus surcharge if applicable. If applicable. Sometimes it may not apply. Okay. Step C, income above specified limit. Step D, C, B plus C. Step D is equal to step B plus step C. Okay. And what is step E? Step A or D, whichever is lower, plus health and education cess. Final tax computation closed. Step F, your marginal relief. If A is more than D, then A minus D is your marginal relief. Okay. Suppose example, if D is more than A, if D is more than A, then there is no marginal relief. There is no step F. If D is greater than A, no marginal relief. That you should remember. So this way I try to explain to you practically all the tax rates. Some computations we did orally, but we'll get ultimate satisfaction when we put it on paper, correct? So let us now, in the next video, we'll solve all the questions, practical aspects from basics to advanced level questions are there for you. So in the next video, we'll do. Okay? Chal, bye bye.